The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listening audience out there is still intact and none of you have closed out your accounts or headed for the hills, given the fact that the Tusaw apocalypse is nigh upon us, and it is. They must have heard the last show, Uncle Mike, because the sell-off was rampant today in the broad market. You know, there's an old Chinese proverb / curse that says, "May you live in interesting times." Well, we're certainly seeing our fair share of interesting times these days. My name is Mark Longo from the OptionsInsider.com, and many of you probably know us as well from the old Options Insider Radio Network. And I am joined today on our esteemed panel by starting off with the man from the mountains, a.k.a. Mr. BBI, good old Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, how was the BBI today?
Oh, not too bad. It's just gold was rather boring today. It was kind of disappointing that we didn't have any crashes there. Silver obviously took a beating, but not too bad today. What happened? Was I supposed to be watching the market today? Did anything happen that was interesting?
Are you just all in on the metals these days? Do you kick all the equity stuff over to Auntie Mike and the Dr. Duke and all that stuff?
No, I definitely have some stuff on the equity exposure, but with this, what we're doing right now is we have puts in place. So there's puts in place, then it's not quite as scary.
Puts. What are those, you say? I trade the pre-1984 style or so where there were no puts.
Isn't that something you're supposed to sell all the time, according to the market? That's right?
Yes, that's just premium you're leaving off the table. You're not putting away in your pocket, Uncle Mike, by selling those.
Yeah. I knew I got that wrong. I should have sold the puts today?
Yes. Today was the day to sell. Hit the suckers' bids. All right, and that screechy voice we heard there was good old Tinny Mark Sebastian from OptionPit.com. Mr. Sebastian, how are you faring this fine and uneventful Thursday afternoon?
Oh, wonderful! I'm in Grand Junction, Michigan, where watching this collapse. So
why in God's name are you in Grand Junction? What is in Grand Junction, Michigan?
Big Bear Lake. So I went hunting for Tusaws, and so I figured, well, hey, I'll go to Big Bear Lake. Maybe I can find Mike Tusaw there. And
I think he was short puts today and needed to get out of town.
Yeah, he did the O'Hare trade.
Yeah, that's what I was just about to say.
or the Big Bear Lake trade, I should say.
Yeah, no. It seems like every time we have one of these major crashes, I'm on vacation. Japan happened when I was in LA, and now this has happened when I'm in Big Bear Lake. So kind of funny.
I had a similar experience. I was out of the office most of the day, though, at meetings, so it seems to happen whenever I'm away from my screens. Most of the fun stuff happens. We were away. A bunch of meetings, and, of course, I had to finalize that old refinance. I'm glad that's locked in at the very least. Don't have to worry about that anymore. And joining us, filling up the final seat on our all-star panel, good old Mr. Tim Navabi, he of the Bouffant Do from OptionsExpress.com. Mr. T-Nav, how are you doing today? Is your voice a little worn out from talking on the phone all day?
No, not really. It was an interesting day. I don't know what else to say. I mean, it wasn't a crazy panic. It was nothing too crazy, as far as the desk is concerned. So.
Did you get a lot of phone calls from people asking you whether they should sell?
Well, I talked to Mr. Potter, and Potter's not buying. Potter is selling. So.
Gotcha. Yeah, I mean, I was talking to my dad today about the market, and I was bringing up the old odd lot index. Back before everybody started trading 100 shares, people would buy odd lots of stock, and so back before all this inflation, and so there was this index that traders in the 70s and 80s would look at, and it was who was buying, how many odd lots were being bought versus how many odd lots were being sold. And when the odd lot index was high, thus a lot of odd lot buyers in the market, you knew that the market was topping out, and vice versa. Apparently, it was one of the best indicators ever created for while it worked. And then my kind of in lieu of the odd lot index is when I get panicky emails from people that aren't clients of mine, or even client emails, or if I talk to brokers and they say their phones ring out the hook of people telling them to sell. It's kind of my version of the odd lot index.
Shaking all the chickens out of the roost, so to speak.
Exactly.
Well, Uncle Mike, how were your phones then today? Were you a lot of panicky clients calling up today?
Not too many. I mean, like on the brokerage side of it, I wouldn't say panicky. We probably had like 3 or 4 calls from guys that are pretty active doing condors on their own. So we just we hedged some stuff. We were buying some deep in the money puts and doing a few things like that to help them with that. But for the most part, it wasn't just because our phones ring off the hook more when the market goes higher, and people aren't understanding why they're not making 1,000,000%. But today. Days like today, it really isn't that much, just because of the fact that no matter how efficient you collar the market, it's never going to be totally free, no matter what you do. So you're not going to catch the whole upside, as I've said many times. But on days like today, people are. It's really, we're like the Maytag repairman a lot of times. We get our angry phone calls are more along the lines of what my friend just made 17% with his tech mutual fund at Fidelity or wherever. How come I'm not making that much in my collared account?
Are you saying there's no such thing as a free lunch, Mike? How dare you?
It's one of those things. You can. Did you know that you can make money when the market goes up or down?
Yeah.
Just follow our simple late night infomercial tips, and you'll be all set.
Exactly.
Don't forget to pay $3,000 to learn how to do it too.
I think it's hilarious that you get more hate mail and hate calls on the up days and the down days. That's fantastic.
Well, and it's not hate calls, because what we always tell people, one thing that we always tell people is that, look, don't hedge your whole portfolio. You have to have some skin in the game somewhere. But with that in mind, if you have, like, I have one client, he's a doctor out in California, and he has a pretty sizable account with us, and then he has a lot of other money elsewhere. And he had about a year ago, last summer, he was talking to us about, well, should I bring the other money over here, because it was just in an S&P index fund, and because we pretty much hedge everything that he has, or at least of the bulk of his money. We do a little bit of aggressive stuff with a smaller portion, but I told him, no, just leave that money unhedged, because of the fact that if we have a bull market, you'll be able to participate on it. You don't need me to manage an S&P index fund. That makes no sense for me to charge you money to do that. Keep your hedged stuff here. And so just as time went by, it worked out pretty well for him at the other account. We underperformed his S&P index fund. But on days like today, obviously we're going to outperform it just because we're hedged. I mean, like right now, this is actually, for the first time in a while, The hedge, I have, there's one portfolio that we manage, the boss, we call it, the bracketed option spread strategy. And the only reason we call it the boss is because it rhymes with DOS, something that Mike Kavanaugh created a couple years ago, the discretionary option spread strategy. But anyway, what it is, it's a portfolio full of covered calls on the sector ETFs, XLB, XLE, XLF, and so on. And we hedge it with puts on either SPY or SPX, depending on the client's tax situation or on their account size. And today, our SPY puts actually went in the money today for the first time in 2 years. So we're actually in the, I think they did for a little bit the day of the flash crash, but we actually have in the money puts today. So tomorrow, I mean, I'm not pulling the trigger on anything on a day like today. If I miss the comeback tomorrow by a few points, I'm fine with that. But we're actually in the money in the puts right now. So there's really, it's going to be really hard to lose any more at this point.
Right. Well, that leads to a really important point, and that there are a lot of people that probably smartly hedge their positions, but now they're sitting with a hedge that's worked. And this is where people screw up all the time, because they let their hedge go to zero while their position may lose. The key to a hedge is what, Mark Longo?
To love it with all you possibly can, all of your love.
If you have a hedge on, once your hedge works, you have to do something with it. Otherwise, it's not really a hedge. So if you're long a bunch of in-the-money puts and they've completely worked and your position is stopped out, well then maybe roll a put spread out so that you still have some protection, but you pocket in some of this cash. It's a very important, especially in all option positions. So when you're doing these types of trades, you need to come up with, maybe it's a little exotic, maybe I think too much, but I teach my people, if you have a put go in the money that you're using as a hedge, you need to do something with that put, because it's now not a hedge, it's a position. Okay? So if that's not your intention, you got to do something with it. So that's an important thing. There's going to be people looking at these in-the-money puts. If it's an in-the-money put and you're holding it, it's not a hedge anymore. It's a position. You got to do something with it.
Oh yeah, and we're pretty much in our accounts today. We're getting close to a neutral delta. We're pretty close to it right now. And
wow, that's crazy.
I'm in total agreement with what you're saying.
I was going to ask you about that. I was like, do you ever just, instead of selling them out, maybe you swap to delta neutral and you hedge the gamma here on the downside? And if you start seeing a pullback tomorrow, would you just sell out the puts instead?
Well, what I'm looking for right now is that if for some, right now there's nothing we can do because we're not on the future side of it for the larger accounts. A lot of them are IRA accounts, and so we're not on that side of it. So there's nothing we can do tonight. But tomorrow, what I'm looking for, I'll tell you what my game plan is for tomorrow. It's the fact that we closed down 500 points in the Dow today. It's very possible we could be down another 500 points tomorrow.
Would not be shocked at all. Would not be shocked at all.
No, not at all. And when we're down that much, now is not the time to roll down your hedge. When I say now, I mean right now. I mean, or like right at the close today. But tomorrow, heck yeah, if we start coming up, I will roll it down and I'll put deltas back on the table, just because you have to stick to the original objective of the portfolio, and that is to be bullish over time. Long-term bullish, short-term cautious. You can still be cautious by rolling down your hedge as you described, but if you want to continue to be long-term bullish on it, you have to stick to your original objectives, which is what we are. So with that being said, tomorrow, if we gap down 500 points, and when I'm looking at my Options Express account and I see the ESU11 down another 40 or 50 points, I'm not going to roll it yet. I'm just going to wait. I want to at least see some semblance of an up market before I roll it up. We'll see.
One interesting thing, I'm going to be interested to see where the SIBO Skew Index comes out today, because my guess is it's not going to be that steep because vol's so high across the board. If you look, VIX was up about 8, VXO was up 10, almost 11. So you've actually, VXO is OEX, more of an at-the-money spread for those that you don't know. It's the original calculation of the VIX. So what it's telling me is at-the-money vol was actually up a lot more than some of that skew stuff. So there's going to be some really interesting plays here. One thing I'll look at, depending on the play, we used to do this. If I had a hedge that really worked, you could actually use a 1x2 to get out of it, collect cash, and have even more protection on a downward move. So it's kind of a gamma trade. And you're saying, Mark, why would you buy all that gamma? Well, if I've got a spread that's working and I want to get long delta, but I really want to protect myself against getting burned by a major market crash, well, guess what? Selling one, buying two, and keeping long the position, it's actually going to kill it if we drop, and it'll put you in a better position on a rally. So there's a lot of different things. The one thing I'll warn everybody against is the nitwit trade, which is buying back your calls and rolling them down. I'm all for buying them back, but if you're short call spreads, Mark, Tim Navabi, would you ever go in and sell covered calls into a market like this?
I can't imagine a scenario where that would be my first choice, is the covered call right now.
I'll tell you what I am considering doing right now, and definitely not the covered call, but the 1x2 repair strategy for sure. It was funny. I did a webinar today for SFO magazine, and as I opened up the webinar, whenever I do and you guys are all familiar with the 1x2 stock repair strategy, you buy an at the money call, sell two out of the money calls same month for an even money. And we just did a webinar with pros and cons of that, benefits, drawbacks, that type of thing. I always start off with, is there anyone here that has a stock that's down in value? And then so people in the background here at the office are just, are you trying to be a comedian? And then I looked at the marketplace while we're down 40 points on the S&P. That's one where I would definitely consider that today, just because vol's high enough to where you can almost get those for a credit. Now, with that in mind, you got to be careful with something like that, because if the stock shoots past where you want it to go, you have to manage it. But in this market, no way. But a 1x2 ratio spread, that's something I'm definitely looking at.
That's something interesting. Yeah, I like 1x2s. I'll do a collared call spread. Yeah, that was another one of my favorite trades, where maybe you roll down the call, but then you also against your long stock, but then you actually own a call against it. Yeah. Yeah, there's a lot of different approaches here, but I will tell people, especially those that have condors and things like that, now is not a time to be rolling down things like call spreads and short calls, because that is how you get completely blown out of the water if the Fed steps in and does QE3 and tomorrow's number somehow surprises everybody to the upside.
Yeah, non-farms to the rescue. Before we get into any more specifics, we are still in the longest banter block in the show history. We should actually dive into the official trading block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.